All right, so welcome back to the India Market Review. This is for the week ending Friday, 9th of December 2016. And as we all know, the Nifty has made some impressive moves in the last few days. And in this section, we want to basically understand what the move was and what we can go on to expect in the coming week. Right? So jumping in without further ado, what you should be seeing on your screen right now is the NSE or the Nifty 50 index, right? In last week's IMR, if you remember, we had, or rather 2 weeks back, last week we did not have the IMR. 2 weeks back, we were talking about are we going to see 9,000 first or 7,000 first? And well, one would be tempted to say based on the last few days move that is going up, but then let's review that. Right? So you're seeing the Nifty 50 on your screen right now, and what you can obviously, I'm sure, observe, just continuing the discussion from 2 weeks back, is that we've come to a very, very strong resistance zone. So this is where the Nifty ended today at 8261, about 12 points higher. And on Thursday, it made this big, massive, about 140 point move, which I'm sure a lot of people were enthused by. Now, if you are just following technical analysis, then what you would have been aware of are all these levels right on top. So you have the 200-day moving average at 8288, you have the 100-day moving average at 8345, and the 50-day moving average at 8385. And as we had mentioned 2 weeks back, around this 8350, 8400 level should be some resistance, and we'll know next week whether that level gets crossed or it does not, and if this is an actually uptrend or whether this is just a bounce in a larger downtrend. So as of now, there's sort of a very small hammer just below significant resistances, and the market is quite aware of that. If you look at the volume picture, right, and this candle right here, you can clearly see the up move has not happened on large volumes at all. And as a matter of fact, today's even though today is up, a slightly red candle, given the overall market action, is actually red, and sessions before that also, you can see that at least in the last few days, the red volumes have clearly been higher than the green volumes. But the week before, the green volumes are pretty okay. So a pretty iffy 50-50 type scenario from a pure technical analysis perspective. Of course, on the indicator side, things are looking much more healthier and bullish, but you have to keep the resistance levels in mind. Switching over to the weekly format on the weekly charts, you can see that this week's volume is clearly much lower than the 2 weeks before. So while we have almost a Marubozu type candle today and a quite bullish one, it does not really happen on good volumes. And if you remember this hammer that we spoke about, from a pure candlestick perspective, you could now say that a reversal confirmation has happened on a weekly chart, and we should therefore expect higher. Yeah, we should expect higher levels on the Nifty. Having said that, the volumes, the low volumes are definitely a concern. Just before we started this session, Ramesh had brought up the issue of FI trading activity, and looking at the FI trading activity for the last several months and intra month for December, you can see that in November, December, they sold quite significantly, quite heavily, 17,700 crores selling in November, 4,900, almost 5,000 crores selling in October. If you look at December so far, so basically a week into the, or rather almost 2 weeks now into the month, and then Christmas is coming, the usual Thanksgiving, and then the end of the year sort of thing, especially in the European and US markets, they are still net sellers, and whatever selling that happened, net buying that happened yesterday and today is not really anything very significant in my view. And this overhang sale which has happened, almost 23,000 crores, we are definitely far from recovering from that selling with the sort of activity that has happened this month. So unless something very dramatic happens in the coming um, um, weeks, which honestly I think is a little, I personally am not expecting something very strong, then we'll, I don't see good volume or good buying to support the further up move. And of course, the volume picture in the chart itself has suggested that. So, so that's basically on the Nifty. So my view on the Nifty essentially would be that there is definitely an upward bias. There's a bullish bias. There is a very tentative uptrend. You definitely have a higher bottom, and now that it has cleared this high, you have sort of higher top two information rather. So, but this could definitely be way too early. It could go to about even 8,400 and then turn around from there. So if I was long on the index or index stocks as a overall rule, I would be circumspect about how much higher this could go to. So at this point, this is looking more like I would say, bounce rather than uptrend that I would want to put fresh money in. But that's my view. Right? So before looking at any of the further sector indices within India, let's have a look at how the rest of the world has done. And well, we're looking at the Dow Jones index right now, and you can clearly see that the Dow Jones has made this wonderful new life high, and probably heading towards 20,000 in my view. And if you remember, we had talked about this pennant here 2 weeks back, and it has more or less achieved its measuring implications. And something is amiss with this volume data of the last 4 or 5 days, 3-4 days, massive volumes and very strong buying on the Dow Jones index. Right? And I suspect more or less the same thing on the S&P 500. Yep, very much the same thing. S&P 500 going up on very healthy volume. So both the narrow index and the broad index in the US are definitely going up. To look at Europe, if you remember, we had spoken about certain key multi-month resistance levels on European indices, which had not yet broken 2 weeks back, and let's see how they are right now. And whoa, very strong breakout, right? You can see this was the level that we were speaking about. I'm just going to extend that right, and very, very strong breakout. As a matter of fact, not only the strong Marubozus, but also the breakout gap which is there. Right? That's a breakout gap which is there on the DAX. That's a big, big boost to the European equity markets. And if you look at it in a longer term time frame, you can see that. Okay, let me just make this weekly. All right, there you go. Weekly candles, and after consolidating here since what this was approximately August, right? So August, September, October, November, 4.5 months of sideways consolidation, and then December finally this has clearly broken out. You can also see the breakout volume. So this is a clear breakout and a very strong weekly candle. And even if it corrects, that would be definitely an opportunity to buy the DAX, and looks like it might end up going to 12,000, 12,200. So that's what's happened to the DAX. FTSE also had a similar resistance, and or rather it was going sideways, and FTSE has gone back up, very strong volumes. Looks like FTSE might create a new life high in the next 1 or 2, 3 weeks, right? So this is the daily chart, and you can see that last 2, 3 weeks it was consolidating sideways, and then it has broken out, and it looks very much on track to break the 7100 on the FTSE. Looking at CAC, so Paris, and you can see another massive breakout in Paris again after this time actually much longer consolidation. So this is almost from here, I would say, right? So if you take it from there, that is March. So 9 months of sideways move, and it has now broken out on there's something not completely right with the volumes picture for this global indices. So, but still, massive breakout, and along with that, you have the gap breakout and runaway sort of gap, indicating very strong, very strong bullish sentiment. And you're seeing this across all the European indices. For completion's sake, we look at the Nikkei, right? So there's a data bug that's also gone up, and then you look at the Hang Seng. All right, just to make sure that the data is correct. Yeah. Right. So it's red because it opened here and closed here. But overall, in trend, the trend is definitely up, though definitely not as strong as what we saw for the European markets. So there we have it. And if you were looking for explanation or reason why the Indian markets have gone up, then well, quite simple. It's like global indices have gone up, and we've just followed through with or without volume is hardly a point right now. We've just followed basically global sentiment. And if you remember, this is something that we have been mentioning for many weeks right now, which is that what will India do, because overall the sentiment globally in terms of, or rather the trend globally, I don't know about the sentiment, is bullish, and whether it's the American or the European indices, they have clearly gone high, while we were trending down. So we were trending down all through September, October, even November, and is this just a catch-up move, basically to go back in line and get back in sync with the European markets, right? So far, looks like that, because I'm not at least aware of anything strong fundamentally on the Indian side, right? US, there's been some fantastic increase in the economic growth, 3.2%, unemployment at multi-year lows, and Europe, I'm not sure. But in India, we've seen IIP stuff go down. We've had the demonetization stuff, and people are now sort of beginning to wake up to its effects. There's a new story that the car companies might, have extended December shutdowns because inventory pileup is happening. Mahindra and Mahindra is offering some big discounts on their vehicles up to 80,000-90,000 rupees. And on the top of the line, Rexton, 2.5 or 2.7 lakhs discounts available in order to push the inventory, right? So with all these things, at least I'm not aware of anything favorable on the Indian side particularly. And the RBI did not cut interest rates. That was a big surprise. So that was RBI day, right? When RBI did not cut rates, everybody was expecting at least a 0.25% and even a 0.5% rate. and that didn't happen. And then the next day we just shot up, and that was Thursday. Now, if you look at, let's say, go back to the American index, this was which day? 12th, right? 12th of, sorry, rather 7th, and this was 8th, right? So next day we just went up with the rest of the global indices. So just going back in sync. So none of the, I don't think it's local factors at play. Local factors, if anything, are, in my opinion, bearish. We have done catch up with the global market. The discrepancy was, or the divergence, rather, not the discrepancy, the divergence in the behavior of the Indian market versus the global market was becoming too big, and we just put a small correction to that. Does this mean we will go and trend up and make a new life high? I somehow have my doubts right now. I would change my view if the market is able to clearly cross 8400, 8450 on really, really good volumes. Till then, I would be a very careful trader and make sure I guard my profits very carefully. Until, of course, if there's a specific stock or sector which is doing exceptionally well, that's a different story. But at this point, I would say important to keep the view that further upside moves are perhaps um, limited and should be sold into rather than bought into. Right? So that's the my view. Right? Of course, as long as the European and the American indices go up, we might still go up with them. But when the sort of move ends, maybe towards the second half of this month, or as Christmas and Thanksgiving approach, and maybe markets there sort of go into holiday mode, then you will see that the local factors here will come back to take center stage, and who knows, then maybe a larger downtrend is then possible. Okay. If you look at the long-term picture on the NSE, 7950, where it bounced from, right? So let's just go to weekly. So where it bounced from here, there is so about 8,000. What's this level? Yeah, around 8,100, 8,000. Is a reasonable support. I mean, it's not a great one, but it's a reasonable support. But if you're looking for really, really strong supports for it to go up from, then those supports are more around 7,600, 7,700, and at further lower level that may be even 7,000 level. So and you can't rule that out, right? The other thing also is, if you keep in mind that we are still not sure about how demonetization has hit. There are more and more concerns now. Then the fall can be aggravated on fundamental basis if the earnings for this quarter come out far more disappointing than what people are expecting or hoping for. So far I think it's been brave faces, but give it a month from now, when the quarterly results start coming out, I think then we will see, we'll see the truth of how the impact basically has been. Right? So that's the Nifty. So overall, the Nifty view is that further upsides are possible. I would not want to be shorting the market immediately. All right, but as it went higher to maybe 8,400, I would perhaps like to look at potential shorts. So as of now, stay long if you're in, but be ready to jump out of the market if some weakness happens. Right? So with that, let's look at individual sectors and see how they are doing. This is the Nifty Junior, and that has basically been a copycat of the Nifty itself, so there's really nothing more to say. The CNX 500 also more or less a copycat of the Nifty, and really nothing more to say. Coming to the bank Nifty, right? So this is definitely interesting. The bank Nifty daily chart. What is interesting is the 18,200 support level that it has taken for almost 2.5, 3 weeks, and clearly done a double bottom of sorts. We have one bottom there and sort of another bottom here, and you can get a pretty clear sort of double bottom line there, almost like a um, uh, head and shoulder bottom, though a little bit stretch of an imagination there, to call it that. But clearly, it's done that. It's also taken, Bank Nifty has taken excellent support on the 200-day moving average, that red dotted line, as you can see, and looks like it's poised to, go up. Indicators are bullish. Volumes definitely seem to be picking up a little bit. So if you look at the overall banking space, well, then perhaps longs can be initiated. But before getting too aggressive on that, let's look at the PSU Bank Index. So, all right, so there you see the PSU Bank Index. So it looks like it's mostly the public sector banks which are providing some strength rather than the private sector banks. And I'm talking basically about this move here, the way it has formed a base, and you saw that in the bank Nifty. And this is something that has been a theme in our analysis for the last month plus, which is if there is banking in the banking space, it looks like it is, if you need to be having a position, long on public sector and short on the private sector banks. So that's what we've been saying, and so far it's borne fruits, I would say. All right. Looking at the other indices now, looking at auto. So wow, this is a massive turnaround on the auto index, and what is point to note and what is significant on the auto index is the way it broke the 200-day moving average in a very, very convincing Marubozu candle on Thursday, plus the fact that this is the old life high. So that's one of my favorite technical themes, indices or stocks or sectors, whatever, is testing their old life highs and then resuming their earlier trend. So in this case, the old life high was this old lower green candle, actually broke through that, went down to about 19,200, and then has done a pretty smart turnaround. And you clearly have higher tops and higher bottoms, right? So this is there. And so far, if you look at the results, people are saying there's not been much of a effect of demonetization in the auto space, though I'm still a little, personally, just a little skeptical about that. But on a pure technical basis, one would be long on autos. Stop loss, of course, this is not an index that is tradable, but a stop loss would be around 20,100. The critical thing is this 20,800, 20,900 level, and how well it crosses through that and maybe goes to 22,000, right? So that is the BSC auto index, and we'll have to eventually see how that pans out. But yes, if you have to be long, then the auto place is a potential place to be long. Not an index we usually pay too much attention, consumer durables, and you can see clearly there's a distinct weakness in consumer durables. And why do I say that? Look at it. I mean, to try to go up, but this week's movement has been pretty feeble, and this adds quite well with the demonetization issue, right? Consumer durables, things like fridges and TVs and washing machines and things like that, which are very much bought on cash basis. And many of the CEOs, MDs, or senior management of the FMCG, white good machine, white good companies have clearly said that demand has dropped 50, 60, 70%, right? So that's clearly there, and though we have to wait for the fundamental stuff to come out in terms of earning results and all, on the technical side, this is clearly a weak space. I wouldn't want to be in it at all. Capital goods, this is again showing weakness, and all the long-term moving averages are clearly trending down. And one more thing you may note in terms of adding to the weakness is IIP numbers for that came out today. Right, not very good at all. So you can see, if you want to see more details, please have a look. October IIP numbers falls 1.9%. Now, of course, this is before the demonetization happened, and we are sort of 2 months back, and IIP is the index of industrial production. So we'll just have to wait and see on how this thing, and we'll not know this for at least I think a month or two. So there is of course the view that when you're talking about core industrial production, what has cash got to do with it? Well, just I don't know. It's these are things that have never been done, and any argument or any statement we make is all hypothetical. You don't have very tough to have what do you say, data-based analysis. I just spotted something. Demonetization drive hitting budget preparations. That's and I'm curious to know how demonetization would all right. So very clearly, some news in this that none of which is good. Two-wheeler and commercial vehicle sales declined by over 20% in November. All right, and weakness in retail gems, jewelry sector, and all of that. It has complicated the government's divestment program. So the government is not actually getting as much tax receipts as they got, right? And this demonetization thing could perhaps just make things a little bit more difficult. All right, so here's one more thing. The Reserve Bank of India has dashed hopes of a windfall of nearly 15 billion based on expectations that up to 20% of black cash would expire worthless, enabling it to pay a one-off dividend to the government. So there's been a lot of criticism about this, and instead of the 30% black cash, finance ministry officials are saying that only 5 to 10% will expire worthless, raising questions over whether the entire exercise was justified. So, now the devil is in the fine print, as we say, and we will see. So the government is definitely, now going to face the heat on its finances, and this will become a stronger political issue, and things are getting, things are now sort of on a, what should I say, not already on a slippery slope, but the slip has not yet speeded up, but I expect it will get speeded up, and we'll see how this goes. So anyhow, got a little distracted, but the point is that all these things, including capital goods, right? If the government is one of the biggest what do you say, spenders in the economy, and things like infrastructure projects, etc., are driven by central and state government initiatives. And if that's going to come down because the central government has less money, then it's going to see an impact on the capital investment side also, right? So this is something to keep a track of. And on the capital goods weekly chart, you can clearly see that there is still a lot of weakness. As a matter of fact, I would stick my neck out to say that on the capital goods weekly chart, looks like it's just consolidating to have a bigger fall in the coming weeks. So that. Okay, FMCG space, FMCG weekly. A bit of a recovery, but right now this recovery is a little bit weak compared to the extent of the fall. And shifting to daily, it definitely looks more optimistic. But again, you've got this resistance level sitting right up there. And I really think the critical thing for FMCG will be the next quarter, this quarter's results in Jan. I would not be surprised that they have been hit to a meaningful extent, that the earnings could come down more than people expect, and then we'll have to go. So the thing is, even if you go long on these sort of setups, you have to keep in mind that 1 month from now, when the quarterly results start coming out, if the results are worse than expected, very quickly the market just turn back down and correct, the 5-10% right? Can't rule that out. So that's an event risk to be aware of. On the healthcare side, so pharma, healthcare, etc., definitely an outperformer in terms of you want to basically compare where this was the demonetization Trump move and then where we are on the rest of the indices versus pharma. You can see in the pharma we are way above where 8th of, or rather 9th of November lows were, but in all the other indices we are either at the lows of this 9th of November lows or even lower in some cases. So this is one space where a lot of strength is still there, but again, would not be too much of a hurry. It's been consolidating for the entire 2016 and getting into 2017 looks like. And if you look at weekly chart, this is the big thing to be concerned about on pharma. It's sort of a massive top of 2 years and has taken support on the support line twice, thrice, but nothing convincing right now to say conclusively that there is a good probability of it going up. There is some amount of, attempted strength, if that word makes sense, on the indicators, but really no. We had a bullish divergence here, it went up, but right now it's not able to go above 50 or 60. And that generally tends to indicate that's the RSI I'm talking about, that we perhaps are still in a bearish mode from a longer term perspective. Having said that, this low of 9,777 on the pharma would definitely be a little tough to break. But in terms of overall performance, yeah, sure, this is showing some strength, but nothing that you have to go bye. Okay, IT. So that was the one space we had talked about last week, or another 2 weeks back, on account of this massive red candle, or rather green candle, sorry, and said that would be something worth perhaps buying. And what seems to have happened since is that we've gone into a flag formation, and after that, looks like from the looks of it, that flag has been broken out. We did mention to go long on IT 2 weeks back. We would have really not made money. You'd probably be now at best break even, or maybe even slightly negative. Having said that, upmove is still, I think, happening. About 9280 to 9 to about say 700 points. 93 from here, 97 plus 700 takes it to 10,400. 10,400 is where the 200-day exponential moving average is. So we could go long. This is definitely not to be shorted, the IT space. Right? Remember, they have become perhaps a lot more competitive, or at least to some extent more competitive because of the depreciating rupee and the appreciating dollar. The only thing of concern again is this resistance zone on a weekly chart that it has to break out of, but quite possible that it could. So we have a tower bottom here, candlestick tower bottom, gone down 1 week, and then a sharp up move, consolidation, and then could move up again there, right? So IT is still a space to buy. The stochastic down below there has flattened out, but it's not really given a buy signal at this point, and neither has the MACD, but MACD is a very strong lagging indicator. So it could turn up once it crosses 10.4 and give the benefit of doubt and say that we were 10 down. Okay, we watch for it to break out. So that will be on the IT side. So IT remains a buy. Metal was a buy, and it still is a buy. This is a weekly chart, and that's clearly the most bullish chart I have seen this week, and it's been the case for many months now. For any of you who are regulars on the BS, on the IMRs, so big up move, right? Cooled off in November, but has recovered the entire November fall. That's the really important thing to understand. Has recovered from the entire November fall and then is now going back up. So I would say this is definitely another one to be buying, right? So, right, so there you have it. This is looks like from a long-term perspective a consolidation pattern. Metals are the ones definitely to be hanging on and putting your money into. It's at a critical resistance level at about the 10,000-11,000 mark, and once it breaks that, so have a look at it. It's at a multi-year resistance zone, right? So if metals break this multi-year resistance zone, then from 10,000, perhaps even 14,000 or 11,000 to 14,000, that's almost a 25% move up on the metals. So from the lows in March, April, when we had said buy, if you looked at the IMRs of that time, so 7 to 11, it's already done a 60-70% and probably do another 25%, right? So from the lows to 14,000, it's almost doubled in about, let's say, a year and a half from counting from March 2016. That's like for the entire sector, that's a beautiful, massive recovery, right? So the beauty of technical analysis, reaffirmed multi-year lows, took off, did a head and shoulder bottom there, broke out, and that uptrend has just gotten stronger and stronger, and now at a very important multi-year resistance, 10-year resistance zone. If that purple line breaks, then 14,000 should definitely is a very likely possibility, right? So metals first on the list of buys, IT is the next on the list of buys, right? Power index, so so this is a mixed bag. It's not really just electricity. It has oil and gas and NTPC and all that. So this is another one, relatively speaking, bullish. Would not want to short it at all. So if you have to look for stocks to buy, then this would be in the power side, and once they break 2050, then 2150 should be quite possible. So this is the BSE power index. Looking at reality, wow, what a recovery on reality, right? This is definitely impressive. So after the demonetization, this is look at this on the weekly chart, very strong hammer, we had 3 weeks back, then 2 weeks back you had a inverted hammer, and this week we have a nice confirming candle. So all said and done, looks like reality is a place one could park some money. And looking at the daily chart, it clearly has today's candle. If you notice, these are the small things to pay attention to when you get some insight. Today's candle on the reality is nice, strong, and green. Almost all the other indices, if you remember, had red and to some extent bearish. But this one has actually made a new closing daily and weekly high close for the last 3 to 4 weeks, and I would expect that this would perhaps go up higher. I think there was some news today about the real estate regulatory bill or act being passed in Maharashtra. So a lot more clarity and a lot more regulation. And if the industry starts practicing these tighter norms, overall it'll probably be good for the entire industry, the economy, the buyers, the builders in the long term. And maybe the index is just reflecting that newfound optimism in the sector, and that the small unorganized guys, the guys who are giving the industry a bad name, are going to get weeded out. And this is on a very strong multi-year support zone from 2013, as you can notice. Right. So of course we have zooming in. Sorry. Right. So this is a weekly chart, and this is sort of, in a sense, if you look at 2013, this was an opportunity one would not have known. At that time, 2014 was another opportunity, and then there was 2016, this was another opportunity. And for all practical purposes, this just could really be an opportunity to get in at reality at pretty perhaps attractive levels. And who knows, a year or two from now, this could potentially be a 50, 60, maybe even 100% plus mover from 1,300 to 1,500 or 1,600 for now, 300 points, that's about 20-25%. That could happen in maybe the coming quarter or two, right? So in the long term, reality definitely has to grow. There's so much that needs to be done in the country in terms of infrastructure growth, development, housing, building offices, and all of that. So the demonetization thing from a long-term perspective is just a blimp, and that's the blimp. 2 years down the line, we look at this chart and say, "Oh, that's all it was," and it's perhaps a good time to start looking at reality to buy, right? So reality, metals, and IT, perhaps even a little bit of power index is what you need to look at. Everything else, I think, is capital goods is a short, consumer durables is a short, auto, I think, is a mixed bag. You should look at four-wheelers and two-wheelers separately, and FMCG is perhaps short. So yeah, so I would look at if you had to really do a quick thing, by the top weightages of reality, that means DLF and the lights, and hold on to that from a 1 to 2 year perspective. Shorter term, in the terms of weeks and months, maybe 3, 4, 5 months out, then IT is, I think, what I would put some money on, right? Everything else, with the market flips, capital goods and consumer durables will be the first ones I think one should, and perhaps even FMCG, to look at shorting or getting out of, right? Getting out of the longs. Okay, so that brings us to the end of part 1 of Friday's 9th December IMR. If there are any questions by anyone in the audience, live audience right now, I'd be happy to take that. The part 2, hopefully we will do that maybe on Sunday and look at the individual stocks in the sectors that we mentioned, both from a long and a short side. So if there's anything, please put it in a chat box, or you can get in touch offline. Thank you very much for being on this. You have the contact information to know more about BAC or about the IMR, and please, as usual, and get in touch with your feedback and any ideas, thoughts, or suggestions you have about IMR or BAC. Right. Thank you, and I'll ping about the part 2 in a day or two. And in the meantime, have a great weekend and use the. I think this is a perhaps a significant opportunity on reality. I have to end by sort of restating that because it's like a triple year, no, 2013, 14, 15, 16, 4 years of base building consolidation that's happened, and it's going to be a tough challenge for it to break down from these levels, right? With all that real estate bill, the demonetization, this has to become a far more structured sector, mature sector, and that is definitely good as far as the stock markets are concerned. For that, stocks in that sector are particularly concerned in the longer term. So I think take a serious look at the stocks in this space and definitely put some money on that, right? So thank you, great, and we'll catch up again, and hope to do a detailed review of the individual stocks later in the week. Thank you, and good night.